Okay, so I'm going to start with a few key notes that I took when I attended Profit Camp. Now, a couple of these things through our conversation, through our lid conversation last week, I mentioned them, but I'm going to mention them again as a refresher, and because it's going to go along with what our discussion will be about today. Okay. And then I can also share the screen when we get to the handout, if that would be easy as well. All righty. So you guys remember how many businesses fail in their first year? Small businesses. We talked about it last week. Anybody remember?
Wasn't it like 80% or 70% or something?
Yeah, 8 out of 10.
8 out of 10.
And do you remember the reason?
Because they didn't pay attention to their profit and loss.
Yeah, it was poor planning. And then 50% of them failed in their first 5 years because they weren't profit focused. Okay, so that's an important statistic to know because this is an important conversation to have, to make sure that you guys are focused on profit and not just production. Because guess what, guys? If you're focused on profit, the production's going to come. Right? So we have to switch our mindset. This is a quote directly from Gary Keller. The cost of your bad habits is your future. Your outcomes in life are often the lag measures of your habits. And I know we talked a little bit about lead and lag measures last week. We're not going to go over that again. But the key piece of that quote was the cost of your bad habits is your future. So anybody know the bold law that would apply to that?
Wouldn't there be a few of them? As what you focus on expands would be one of them. And
yeah, there could be a lot that could apply to this. But if we don't change what we do, right? What's the definition of insanity?
Doing the same thing over and over and expecting different results.
Yep. And so if we know that things aren't happening, we have to make changes, right? We can't just say, oh, better luck next time, or, oh, I'll just make a couple more calls, or we have to know what that focus is, right? So it's vital to know profit that you intend to make. Notice the wording there, that you intend to make. Not that you want to make, not that you hope you'll make, but that you intend to make. And as we've already mentioned, too many people focus on production, not profit. And so you need to make focusing on profit a habit, right? So I think in one of our coaching sessions, maybe Jason, it was with you, I don't remember, but we had talked about, anybody remember me talking about the plane door closing, going on vacation? So, okay, when you go on vacation and you've got this massive list of things you have to do, especially if you're going on a plane, right? The plane's leaving with or without you. They are not going to wait for you, right? And magically, we all suddenly become the most productive we've ever been in our life, getting ready for vacation and checking off all the to-do things. And somehow we get it done and we get on that plane before the plane door closes, or the cruise ship before it sails, or whatever, thing you want to do, right? So think about every day as being that plane door. Every single day, the door closes. So every activity that you do is either going to move you closer or away from your goals. So at the end of the day, did you make it through the door? Or did you get grounded? right? Something to think about there. So one of the things that you need to do in a bit, after I go through a few things, we're going to do an exercise around this, and I'll put that document back in the chat for those that came in a little bit late. So you need to commit to a certain annual profit. Okay. And then each month you need to take that profit out and put it in a Life by Design account. And we're going to talk about some of the different types of accounts that you should have, the minimum that you should have, and then the others that you could have as you grow your business and you become more and more profitable. So pay yourself what you're worth. Are you worth $10 an hour? Even California doesn't think you're worth $10 an hour. What's minimum wage now? 15 something? I mean, come on. What's your time worth? What do you want to be paid per hour? What, Luke? You guys can unmute and participate. It's okay.
Mucho. I'm not.
Mucho, what does that mean?
It's a lot in Spanish.
Per hour.
Well, I mean, I know what mucho means, but put a number on it. What do you want to be paid per hour? $50, $100, $200? What's your time worth?
I would say 200.
Okay.
200.
That's the example they used in Profit Camp. There's no right or wrong. It's your number. But pay yourself what you're worth. Then, when you're doing your activities, ask yourself, is this a $200 per hour activity? Is this something I should be doing? Or is this something you can leverage? For instance, like a TC. You shouldn't be doing what they do, right? That's not a $200 an hour activity. Lead gen, that's a $200 an hour activity, right? Think about leveraging the things that are not money-making activities. So I thought this was interesting. Courage is to do something you know is going to hurt, and you do it anyway. Stupidity is knowing something is going to hurt you, and you do it anyway. Wisdom is knowing if you're about to be courageous or stupid. I had to listen. I was like, what did she just say? And then it made sense when the wisdom came in, right? So most agents don't think profit, they simply hope. So if we're honest with ourselves, we either have been or are that agent who simply hopes. So think about that. Okay, I'm not going to ask you to raise your hands and rat yourself out on this one, but think about that internally. Do you want to just hope for the best, or do you want to make the best happen? So a lot of great things come when we start thinking about profit. Some of you have been through a business planning clinic, and if you haven't, it's okay, but so you'll just understand the reference to the models, right? We have the business model, we have the budget model, the economic model, right? Those are things that help us when we're thinking with the mind of profit. Are we going to spend money on something we shouldn't be spending money on? When you think profit first, you'll think twice before spending money. And those things become really important when you get those emails, 50% off, right? Well, anybody get emails from Keller Williams approved vendors all the time? Yeah.
Oh yeah.
Shiny new objects, 50% off signs. People ask me all the time, should I buy those signs? No. Support your local vendors, right? Nothing wrong with those vendors, by the way. However, the 50%, you're going to pay more than that in shipping those signs to you. Okay. So don't get fooled by those things. We don't need almost everything that they email us. If you ever go to a mega camp or a family reunion, you're going to go into a big room with vendors full of cool stuff. You don't need most of that. And some of it you might. And as you grow in your business, those things will help you. Profit first, though, right? You earn the right to have those things as you build your business and become profitable. So don't just be a realtor. Be a business owner. Now, here's something that some of you have already heard me say this, because I can't remember where we talked about it last week, but I know all of you have not, and this is going to be super, super important, and I'm going to explain why. Quit giving advice and copying each other unless you've seen that person's P&L, their profit and loss statement. That is a direct quote from Gary Keller. Most agents are not profitable and they're full of debt. Most teams are not profitable and they're full of debt. But on the outside, they look amazing. And I personally know of teams that look amazing when you look at them on paper and you see all the awards they get every month. Number one here, number one there, always number one. Guess what? I know of a team that was like that and had 20 people on their team, over 200 transactions, millions of dollars in volume. They did not take home 6 figures. Why would you do that? Gary Keller has had 3 or 4 years ago, there was a team on a family reunion panel and their numbers were massive. And I'm sorry to the ones that have heard this story, but it's worth repeating, even to the ones that have heard it. Their numbers were massive. We're talking hundreds of transactions, like 500-600 or more transactions, billions of dollars in volume, very large team, talking about all their systems and how great they are doing all this production. Guess what? That team didn't have any profit. They lost money. Gary Keller found out after the fact, and he pledged from that time on, no one will ever be on stage at any event that we do unless he has personally seen their P&L. Because who cares if you've done 500 transactions if you didn't make a dime? Why would anyone do that? So I hear all the time agents say, oh, so-and-so's doing so great. So-and-so's doing great. They do this, they do that. I've had those agents tell you newer agents, oh, you don't need to do that. You don't need to do that. I've never done that. Please do not listen to other people unless you know their circumstances. Okay, I'm not saying you have to go ask every single person for their P&L, right? They're not going to share that with you, but you get the point. Be careful where you get your advice from, especially when it comes to profit, because there's too many agents out there that care more about the vanity matrix. Do you know what I mean by that? They care more about their numbers and production and getting awards and all that stuff. Guess what? Those awards are great. And when they're earned, yay, but they don't pay the bills. Profit does. So don't be a vain agent. Be a profitable agent. Okay.
Um,
We really want to help you guys build your life by design, right? And so basically, if you have a business that supports your lifestyle, that equals a growth agent. Or do you have a lifestyle that needs to be supported by your business? So you build your life by design and you build that through your profit. And then too often we live by default, not by design, right? The more money we make, the more money we tend to spend. And particularly as agents. And that's where the problems come in. Because I remember back in the day and in 08, all those years leading up to that, agents were driving around in these fancy cars and buying houses and doing all this stuff. And then when their world crashed, because they didn't shift with things, by the way, things can change and things can shift to totally a total opposite market that sounds horrible. And if you're in this to win this, you're going to win it because you're going to shift with it. These agents didn't know how to do that. They got on board the gravy train. And they went and spent all their money because they didn't realize the gravy train ended. And now a lot of people were in lots of debt, lost their cars, lost their homes. So we don't want to spend money just because we have it. We want to make a plan, okay? So your business should pay your salary and you shouldn't commingle your funds. Now, we did touch on this last week, right? So, and when I say commingle, to be clear, this isn't the kind of commingling that the DRE talks about that's against the law. But you should all have a minimum of 2 different bank accounts. You need to have a personal checking account and a business checking account. Okay, that's the bare minimum. And never put your commission check directly into your personal account. Always put it into your business account and then pay yourself from there. Now, ideally, you're going to have a savings account, a personal savings account. You're going to have a business savings account. So when you get that commission check, you need to get with your CPA and how much of that do you need to put in that business savings account that you set aside for taxes? And you never, ever, ever, ever touch that until it's time to pay the taxes.
30%.
What?
30%.
If that's what your CPA tells you, everybody's situation is different. So there is no right or wrong number. Make sure you're asking your CPA about your personal circumstances, okay? Because some people could be less, some people could be more. Just really depends on everyone's circumstances. If you've not yet talked to one and don't know, Luke, that would be a safe number to start with for sure. Because you're probably going to be over planning for most people at this stage. And you never know. So, okay, so then as you build things, we talk about a life by design and we talk about what you have your goals. Remember, we did the lid conversation last week where we talked about lifestyle and we talked about, that includes your regular day-to-day lifestyle, but then also is that including kids' college? Is that including aging parents? Is that including a vacation with families? Whatever those things are, that's creating your life by design. And so I would encourage you to have another savings account that is your life by design account. And that's where you put your profit. And that's where, as that adds up, you can start to pay for that life by design. Because remember, some of those things that you put in that lifestyle could take 10 years to accomplish. That's okay. It's what are we going to put toward it this year? Right? Now, before you start putting away for your life by design, there's one thing that everyone ideally should do. And that is have 3 to 6 months of reserves for what it takes you to live in a month in a savings account. That should be your first goal, is to have that. Because if something should happen, you want to make sure that you can continue to pay the bills. And once you've accomplished that, start creating your Life by Design account. And you should be paying yourself from your business, right? We'll talk in more detail about how all that works later. But right now, I want you to go ahead and open up the document that I gave you, and I'm going to put it in the chat again. Okay. So this is a few pages from the Profit Camp workbook that I have. And so when we start with profit, did everybody have a chance to get that, to download that? Okay. When we start with profit, you'll notice there on that first page, it's page 9 at the bottom of this. It says the old way of thinking and the new way of thinking. Right? So the old way was income, cost of sale, that's COS, expenses, and then what was left over was your profit. But the new way of thinking is income, cost of sale, profit, owner salary, expenses. So we don't want to just collect the money, pay the bills, and then keep the rest, right? We've got to really think about what we're doing with our money if we want to be profitable and build that Life by Design. So cost of sale, does everybody know what a cost of sale is?
That doesn't include advertising. It's more the cost of the actual transaction that you're pursuing.
Yes. So think about the way it's worded, cost of sale. It's a cost you have if you have a sale. If you don't have a sale, you don't have that cost. It's an expense. So cost of sale. Okay. This is a profit allocation form for a Life by Design. So this will help each of you be able to plan profitability and plan it wisely. Okay. Now I'm going to explain how this works, and then it'll be an exercise for you guys to do on your own. And then of course, we can pick the conversation up next week, or if you want to talk about this, we can. So notice this first section, because it's divided into sections, profit allocations. So this would be where you would put items like pay for kids' college, aging parents, family vacation around the world, whatever it is that you want to do. Maybe you want to open a nonprofit business. It doesn't matter what this is. There's no right or wrong. That's each person's choice, right? Maybe you want 10 investment properties. Okay. So then over here in the amount, over here, you're going to put how much this year do you want to put toward those items? Okay. Now, if the answer is 0 because this year you're not focusing on one of your Life by Design items, then don't put it in there. Okay. Doesn't mean it's not part of your plan. It just might be future part of your plan. So if it's put kids through college, however much you want to put in the bank this year, that's what you're going to put here. Okay. And then you'll total those up. And then you're going to add taxes to that. Okay. And then you get a grand total. So then you're going to figure out how many units, how many transactions do you need just for this section? Okay. This is all part of building that Life by Design. And let me do a piece of math real quick so I can make sure I'm explaining something to you correctly.
Jody, how many percentage you put? Like, what's the percentage for the taxes?
That's up to you and your CPA.
Oh,
Okay. So if I do, no, that's not right. Hold on. That's still not right. Why is this not coming out? Okay. So whatever your tax bracket is, 20, 30, 40%, whatever you're figuring it on, this total amount, divide it by the rest. So if you're putting 30%, divide this, hang on. Yes, divide this number by 70%. What that's going to do is give you the grand total number. It's not going to give you the amount for taxes. It's going to give you the grand total. And then the difference would be the amount for taxes that you would put away. Does that make sense?
Wouldn't you multiply by 0.7?
No. So here's, okay. So if you take 10,000, I'm using 10,000 because it's a super easy round number. Okay. So if you take 10,000 and you divide by 70%, you get 14,285 and change. So that means $4,285 is what would be taxes. And the grand total you would need for $10,000 in profit is 14,285. Does that make sense to everyone?
I've never done it that way, but because if you
Because here's the
10
thing, if you take 10,000 and you multiply it by 30%, you're only going to get $3,000, right?
right,
But that's, you have, it's, when you divide it, it factors in the entirety of the amount because you still have to pay taxes on that $3,000 that you're earning toward that, right? So
Okay.
that's why you divide it.
After all these years, I finally get the right formula.
You know what, Nina? I'm going to be really honest with you. It was only a few months ago when I went to it wasn't even Profit Camp. It was something else. It actually dawned on me for the very first time why you divide. Because when we do our, 30, 30, 40, like expenses and cost of goods and profit, I never understood why they divided it. And then the light bulb clicked. So I know it sounds weird, but when I did the math over and over again, it just works.
It works. All right.
So whatever your percentage is, 20, 30, 40, if it's 20%, you're going to divide that number by 80%. If it's 30, you're going to divide it by 70. You guys got it?
So sorry, Jody, so the 14,285 is a grand total, right?
Yes.
This case.
The grand total. So then you would just back out the 10,000, leaving you with the 4285, which now you know is what you need to put away for taxes for that amount into your tax savings account.
So you need to put away, like, let's say 30% of the 14,285, right? For taxes.
Whatever your CPA says.
Okay.
In this example, that's what we used, right? Your amount is probably going to be more than 10,000 for this, and that's okay.
No,
I used it because it's simple math.
Okay.
Okay.
I think the tricky part is when you understand that you're finding a pre-tax amount as opposed to a post-tax amount. That's how I make sense of it in my head.
Good way to explain it. Yeah. And that is how we have to do it, right? Because when we, like we mentioned earlier, when we multiply, it doesn't come out right. We would be not putting away enough money for taxes. Good way to put it, Emily. I like that. Okay. Now, next section, personal expenses. So this is where you're going to figure out what your personal expenses are each month. And I think if you scroll down to page 14, this may not be an exhaustive list for you. You may have expenses that are not on here, and all of these may not apply to you. But what are you laughing at, Emily?
I sure as hell hope that all my expenses are on there somewhere.
That's a pretty long list, I know. What's interesting, they told us in Profit Camp, one of the things that they did is they pulled out, notice here we have restaurants and then down here alcohol. People actually don't realize how much money that they spend on certain things. And they noticed that during COVID, this expense for many went up. And so, but other things, these expenses went down, right? Restaurant expenses. We need to be cautious of what we're doing. Think about subscriptions. How many of you have subscriptions to things that you may not even remember you have a subscription to? You know what I'm doing? I'm going to be in the process of, I'm going through all of my stuff and I'm going to put all of my subscriptions onto one card. No subscription will ever be on a different card, because then I will always be able to track it and never forget about one. So I'm going to go through every single one and move it to one card. I did hear a tip from somebody in a profit type class few years ago that said, if you put it on one card and you call and have that card canceled or say that it's lost and have them send you a new one, it'll cancel all of your subscriptions because they won't be able to charge it anymore. And then you'll actually find out what you have or what you really need and what you don't need. So interesting thought, but I am going to put all of mine on one so that I can keep track. So again, you may not have all of these, but this will help jog your memory, because think about some of the things like veterinary care. Many people have animals. Do you have a monthly vet bill? Probably not, unless you have a chronically ill animal. But how much did you spend on vet care last year? Divide it by 12. Get a monthly number, right? And then when you're figuring out, close your eyes if it's making you dizzy, going back up. When you're figuring out what you need for the year, it'll be there. Now remember, and we'll talk more about this next time, okay? But when you're paying yourself and you put you figure these expenses out because you have to pay this to yourself, right? So you pay this to yourself every month out of your business account. And really what you put in your personal spending account and what you take out of your business account should be this amount of money. It shouldn't be extra, because the extra needs to go in your Life by Design account. Keep in mind though, doing it that way, you're going to sometimes have extra money in your personal account because you're factoring in annual expenses monthly. Don't spend it, because it's there for when you need it, when it comes up annually or however often. Okay, so you're going to do the same thing with this exercise. Is you're going to figure out what your monthly amount is, and then you're going to get your grand total by adding your taxes in. Everybody remember how to do that? Okay. Now, cost of sale, you'll notice something a little bit different here. Okay. Your cost of sale are things like your market center cap, your Keller Williams royalty, team member splits as you start to build a team. It could be things like a concession that you make to a client to close a deal. Okay. Those are cost of sale. So you're going to add those up. And then you'll get your number, and notice there's no taxes here. Anybody know why we don't figure taxes here?
Is it because they're going to be figured out in income? With your income tax, your annual income tax?
Is there a write-off?
Yeah, they're essentially a wash. So it's money that comes in, but it goes back out and it's written off. So it's essentially a wash. So you don't have to add taxes in for this amount. Okay.
So they
Now,
are deducted from your,
Huh?
They're deducted from your income. So therefore.
Yes. Yes. Now there are two things that one could argue could be cost of sale. And it's not wrong necessarily to put it cost of sale, but it is more of an expense, and it should be put as an expense as we get into our expenditures here. And those two things are your coaching and your transaction coordinator. Okay, even though you don't have a fee with a transaction coordinator unless you close a deal, so you could put it as cost of sale. But that actually is better on your P&L to be put under professional services. Okay, and your coaching is under education. So remember, most coaching programs don't wait and get paid when you close a deal. Most charge you by the month. And so it's actually an expense. It's not a cost of sale. Okay, we just have it set up for ease for you guys to be able to only pay it when you're making money. So hopefully that makes sense. Any questions about that? Okay, cool. Alrighty, so now your expenses, these are the things, the cost of your doing business, right? So as you build or grow a team, this would be any salaries, benefits, professional services would be your TC, your accountant, those types of things. Now keep in mind, this is set up based on the MREA expenses, okay? It does not mean that you won't have subcategories, but every expense that you have should fit into this main category one way or another, okay? Lead generation, listing management, occupancy, that's your rent, desk fees, whatever you're paying, supplies, office expenses, communication technology, automobile. Now, here's where some people get into trouble with when you're figuring your taxes. So I do want to point this out. When you put your automobile expenses, this is true business expense. This isn't your personal auto payment. This isn't your insurance for your car. This isn't any of those things, okay? That goes in your personal expenses. That does not mean you can't write off portions of things, but this is business expense. So unless you have a vehicle that you bought specifically for your business and use only for your business, you know, such as you'll see some teams with a moving van or different things, right? Those expenses go into your personal expenses.
So Jody, when you have gas, you know, are you going to just have to do the mileage?
Mm-hmm. You can do mileage or a fixed, talk with your accountant, what's best for your situation, right? And even though you're going to put it in your personal, then you're keeping track of that, right? So your accountant will know what percentage by your mileage that you can write off of certain things. So again, it doesn't mean you can't write it off on your taxes. It just doesn't belong on your P&L. Does that make sense?
Wow. Now let me ask you that about entertainment. So like when I was driving my client around, because she came from the Bay Area, we had to basically spend the whole day looking. And so I had to stop for lunch and I bought her lunch. So is that the cost of sale or is that an expense?
That's an expense, and that would likely go under, that could go under lead generation because you're with a client. Keep in mind education. So that's not just the cost to take a class, right? So let's take Mega Camp because it's coming up. So let's use Mega Camp as an example. Under education and coaching, you would have education travel, right? So it would be education. I break mine out into hotel or, you know, lodging, whatever, and meals and entertainment and all that kind of stuff. So you would have those subcategories so that you would be, that wouldn't go up in your monthly food stuff with your home, right? Or your vacations. This goes as a business expense. So that goes under education. Even though it's a travel expense, it goes under the main education heading. Okay. Let me, there might be another page that I didn't get in here. Yeah, it'll be, if you go into the MREA book, And let's see what page it's on. And I probably have a handout that I can get to you guys next week. But if you go in, because there's a lot more to this profit discussion than we have time for today. However, the MREA book on page, well, 193 is the main, what I'm showing you here, although this is a little updated from the original MREA book. I don't see where it's broken out. I will next week, and let me make a note of it right now. I will bring you guys another handout that will be more detailed so you can see how you could, one way you could break things up into this, okay? I'm going to do. Okay. Alrighty. So again, you're going to add all these up and then you're going to factor in your taxes. Okay. Now with each of these, the expenses, the personal expenses, your business expenses, your personal expenses, and your life by design, in each section, you're going to figure out how many transactions is it going to take for each of those things. And then of course, you're going to add that all together here to find out the grand total of transactions you need this year for your life by design. Any questions about that? So you'll notice that on these pages, it will, there's also a little, if you forget, there's also a little graph here to show you how to get your taxes figured out. And then it breaks it down. So you have room to write on here if you print this. So feel free to use this to be able to help you create your life by design and have a profitable business. Because now some of you are super new, some of you not so new. So if you haven't already started the 2 accounts and you're not so new, please do that right away. I think I gave that as homework to either this group last week or to be able to do that. Okay. And if you don't have those separate savings accounts, please get those open. You need to have your tax savings account. You need to have your personal emergency savings account. When you get that built up to 3 to 6 months, minimum 3, then beyond that, what you would like to have in there, then you are in the right to start building your life by design.
I have a question, Jody.
Oh, hold on, Adina. Carlos had his hand up first. Carlos?
Hey, Jody. So yeah, that was me about opening the second account. I had a question though. So I'm buying my signs and I'm doing all that stuff. Would I be paying or through the business or still out of my personal and then claiming taxes out of it?
So if you're buying signs, that would be a business expense, not a personal expense.
Okay, so use the business account. Okay.
I would, yes.
Thank you.
You're welcome. Adina?
I heard about this online banking accounts, where if you have an investment, you can invest in, it's called like a high yield account. Do you know anything about that? Like, would it be actually a better investment to save my investment on a high yield mobile or online banking account?
Okay, so first of all, I don't give financial advice. I never will. That could get me into trouble. I mean, I can teach you about finances, right? But as far as what to do beyond that, I can tell you that there are good choices online as far as savings accounts. I personally have one. I know many people that do. Do your research on the company and make sure they're a well-known, reputable company.
Okay.
What company do you use, Jody? At least a referral.
I have one of my online accounts through American Express Savings. I know people have used is it Ally? A-L-L-Y. some other things. Citibank has stuff. I mean, there's a lot of online stuff out there. Just make sure it's a reputable company. If you've never heard of them, might not be a wise choice.
Perfect. Thank you.
Okay. We covered a lot and simple enough and yet can be a little confusing. So any thoughts, ahas, questions?
Yeah, it is possible to build a life by design.
It absolutely is possible to build a life by design. And we want to come at it from the standpoint of profit first. So remember the statement that I made earlier. What is the profit you intend to make? Not that you want to make, not that you hope you'll make, not that you're just going to make a few phone calls and, oh, I did my 2 hours. I didn't make any appointments, so I'll try again tomorrow. If you intend to do something, what's it going to take to make it happen? So figure out for yourself, be realistic about it. It would be unrealistic if you've never done a transaction or if you've only done a handful to say, I'm going to have $1 billion in profit next year. Okay. So that being said, I will never hold anybody back. If you do that, fantastic, right? But be realistic about it. Okay. What's the profit you intend to make? Anybody on this call still in another job? Okay. Do all of you that have your hand up want out of that job and into real estate full time? No right or wrong answer, by the way. No, we've got mostly yeses and a no. Okay, that's doesn't matter. Remember, this is a life by design, right? And real estate's going to afford you that. When do you want out of that job? What money do you need to be making to get out of that job? What money needs to be in the bank for you to feel comfortable to make that leap? Figure it out. Set a date. Make a plan. And if you have completed your 90 days, your Kickstart classes or Ignite, however long you've been in, whichever you've done, in your business planning clinic, and you have not had a one-on-one discussion with a coach about your business plan, please reach out to pcaskacoach@gmail.com and request that one-on-one. That comes after your 90 days. You have to have completed some things before we'll have that one-on-one with you. And it's for a reason, because you need to be prepared. Once we have that one-on-one, you need to be prepared to be held accountable and do what you need to do to make those things happen. So that comes after we lay the foundation. And then you've had time to be realistic and figure out what these goals are. And then we are absolutely going to have that conversation with you. Okay. If anybody needs a reset, reach out to us and we'll schedule a time. Okay. Because we absolutely want to help you build a profitable business. That's our goal as coaches. We don't want you just to be a real estate agent that hopes they make money, because now they have a license. And so hopefully it'll do something for you, right? We don't want you to pay dues every year and not make money. I know agents that pay dues year after year after year and barely make enough money to cover their dues. I don't know why those people keep a license. Personal choice, I suppose. But seems unrealistic, a little silly.
About royalty question, Jody, I should go to my market center administrator.
That I can't answer. $3,000 a year goes directly to KWRI. The market center doesn't keep a penny.
Okay, but that's like only if I make a sale or like
Yes.
I have to pay it no matter what.
No. Only if you make a sale.
Oh.
And it caps at 3,000. So once it's 6, so the way it's figured, this is no matter what market center you're in, it's 6% of your commission.
Mm-hmm.
goes toward your royalty until you've paid 3,000 to Keller Williams International, and then it caps. So you'll likely cap on that a little bit before you'll cap with your market center.
Okay, so that could be from one sale, basically.
Depends on the price
Okay.
point.
Yeah.
But it could be.
Okay, great, thanks. And I don't pay taxes after that, or no, right? No, there's no tax, yeah. It's just, I just pay the royalty fee. And I can write it off of my taxes the next year or something.
Yeah, you don't pay taxes to anyone but the IRS. You're responsible as real estate agents. We are self-employed business owners, and we are responsible to pay our own taxes. The market center does not pay taxes.
No, I understand, but like I don't pay taxes after the royalty fees, right? When I pay it.
You pay taxes on your income as a whole,
Mhm.
but a royalty fee is something you can write off.
Yeah, that's what I meant.
Yeah.
Okay. Thank you.
So
So we
Jody,
don't have to figure taxes on that money when we're doing our life by design sheet, because they do wash each other out.
so I have a question because, and I asked CB and he seemed to be like, okay with this. But since, my husband has a consulting business, and so it's just, we're a sole proprietor. And so I'm just under real estate because we have, we have a rental, and so I'm putting my business into that account, but under real estate, and doing all my, income and expense in that category, but it's under a general sole proprietorship between my husband and I. So have you come across anything that would make you think that's not a good idea?
That's an accountant question.
Yeah.
That's a CPA question.
Yeah.
Yeah, because as you build your businesses, guys, and we're not going to touch on this right now, but as you build your businesses and grow, depending on how you're growing, who you're growing with, if you're building a team, you're having other people with you, some agents will incorporate. They might do an S corp, a LLC, or whatever else is out there. And some people never do that. They choose to stay a sole proprietor. There's tax consequences to any one of those options. And so make sure that you're talking to your own CPAs about that. Most of you are in a position right now where none of that matters right now. And you have to be making a certain amount of money and have a certain amount of liability before that ever makes sense, because you'll actually pay more fees and taxes by doing that than not doing it. But again, as you grow, those are conversations you'll have with your CPA.
Thank you.
You're welcome. Any other questions?
So
Was-
what's our homework for next week?
Well, you have it right in front of you. Make sure and you fill out that form. So I want everybody to fill out their form, and here's what I want you to do. And this is how I'll know you've done your homework. When you log on next week, everybody come back and put in the chat exactly how many transactions you need to have, or I like to say how many families you need to help to create your life by design. Okay. And then, of course, if you have any questions, email us at PC Ask a Coach. We know they don't always come up right in the moment, and we can help you. Was this information helpful today? Awesome. So many more discussions, lots more to unpack from Quantum Leap and from Profit Camp, but we can only do so much at a time. That was about a total of 9 or 10 hours of classroom, and we've only had two masterminds. So I'm not going to bring all of those hours to you, but I am going to bring a few more key points next week. So if you have questions around all of this, please come prepared with them next week, okay? Keep in mind, ask anything you want, but if it's a CPA question, I'm going to refer you right back there. Okay, guys, have a great week.
Thank you.